My name is Silvia Fernandez, and I'm board member of ChileDay. Now we will speak about technology with a session on AI and the future of finance. Artificial intelligence is transforming financial services, not just from an operational point of view, but also in the way that global asset managers are leading their investment processes. To learn about their experiences, I would like to welcome to this panel Doug Robertson, Head of Responsible AI at HSBC, Muzo Kayacan, Product Strategy at Systematic Active Division at BlackRock, Charlotte Good, Head of Fintech Innovation and AI Strategy of Schroeders, and will moderate this panel Marcial Rapela, Country Head of Bain and Company. Thank you very much.
Well, good morning. Buenos días. My name is Marcial Rapela. I'm a partner at Bain and Company in Chile. I would like to start thanking Invest for the organization of this great event. I also like to start thanking the panelists, Muzo, Doug, and Charlotte, for being here and sharing their experiences. The idea today is to really get the most out of the experience of the panelists. They are leading the push of AI in their respective companies, and they have very good experiences and to discuss with you. So the idea will be to discuss and let you free for the coffee break in 45 minutes. So I would like to start with an introduction of each of the panelists and the company's initiatives related to AI, if you like. Would you like to start, Muzo?
So am I doing my 5 minutes now?
Yes, please.
Perfect, okay. So I'm Muzo Kayacan. I've been a portfolio manager in the systematic active equity team at BlackRock for 15 years. And I also oversee product strategy, which increasingly involves going out and talking about what we're doing with AI. So more and more my role is the human to explain what's going on in the machine. We've got an interesting history, and I think we can give you an interesting perspective, because as quants, it's always been our belief for 40 years, essentially, that there are certain decisions and certain tasks that machines or computers do better than humans. So we started off, it depends where you want to draw the line in terms of this, obviously artificial general intelligence, something we may or may not ever get to, and then there are like really, really, really basic algorithms that just make a choice. We started off 40 years ago with these incredibly basic algorithms, which basically say buy a stock that trades on a low price to book, short or sell a stock that trades on a high price to book. And then we started incorporating more information because there's more data and information that explains what a stock price will do. Where are we today? We use transformer-based large language models. So transformer, that's the T in ChatGPT. These very sophisticated models that have basically been trained by reading everything out there on the internet and beyond, we use them for actually quite simple tasks. We want to feed a financial document like a broker research report or an earnings call transcript. Maybe some of you are CEOs and CFOs, and you do these earnings calls where you announce the earnings and then talk to brokers about what's been going on with the company. So we use transformer-based large language models now to effectively summarize these documents and then predict whether the stock price will go up or down. And so this is one interesting perspective. You think about everything that GPT can do. You want to go on if I want to go on a holiday to Chile, it'll tell me all the things that I should see. If I want to do, code up an app, it'll code it up for me. It can write an essay on Shakespeare. And then you can interact with it and you can talk to it, or it seems like you're talking to it and ask it almost any question you want. Whereas what we do is we literally feed it this document and say, is the stock going to go up or down? So I think this is one interesting learning perspective for us, and more people out there that are achieving success with AI are finding if you just give all of your employees access to a Copilot or GPT and just sort of say, like, change things, go out there, solve problems, that doesn't work so well. What we're finding is much more, you take these phenomenally sophisticated things that can read an entire book and understand everything that's going on there, and just give it this really simple thing. Is this good or bad? That works very well. And then we also use machine learning because over that 40-year period, we've discovered over 1,000 signals, 1,000 different pieces of data, interactions with the company's brand on Instagram, whether people talk about this company's moat, whether employees are happy, whether hedge funds are shorting or going long the stock. So you've got 1,000 different data sources. Okay, what do you do with all of those things? A human being can't evaluate all of those. So we use a different type of AI, and actually a very useful type of AI, we call machine learning, that basically tests 1 million different combinations of these different data sources and identifies the best way to blend information. How important is valuation for a stock? How important is the social media activity around their brand? So that's, gives you a little bit of a perspective for sort of how we're using it. And then once you've built this machine that does a very good job of predicting whether a stock price will go up or down, you can apply it in hedge funds, US equities, European equities, emerging equities. So that's, in a snapshot, how we're using AI.
Thank you. We will need to deep dive on some of the use cases. Doug, please.
Doug, thank you. Great to be here. Thanks for having me. Doug Robertson, Head of Responsible AI at HSBC. And so I would say up top, like Muzo has described, at BlackRock, we've been doing AI for a long time at HSBC, as many large financial institutions have. Unlike Muzo, I don't have the technical background or expertise in respect to quants, but my background is mainly in risk management. And so I'll start by saying a little bit about what responsible AI means for HSBC, and then how that fits as part of our broader AI strategy. So it's fairly, I think, traditionally, responsible AI has been viewed as sort of more around the concepts of ethics, ensuring that we have the right principles in place. A lot of these are existential. A lot of these are not specific to how we operate as a financial institution, but underpin everything that we do and align to our company values. And while that very much remains in everything we do, and you should note we were one of the earlier banks to publicly disclose principles related to the safe and responsible use of data and AI back in 2019. The responsible AI at HSBC is very actionable. It's about ensuring we have the right structures in place to manage risk, to look at the governance of our book of work, of our portfolio, ensuring that every use case that we have is grounded in a defined purpose, and that we expect to receive and have benefit for our employees, customers, and stakeholders. And so that is a key pillar as part of our group AI strategy, along with driving commercial rigor and commercialization, again, ensuring that we have defined benefits and business cases for our use cases, that we don't just have completely unfettered access to tools, that those business cases are aligned to objectives of the bank and our business units, but supporting that we have common capabilities and platforms. So increasingly we see the need for centralization, particularly as it relates to the use and deployment of generative AI. These technologies are still fairly novel, but they're moving at a fast pace, and so having the expertise in particular domains is really key to help accelerate adoption, whilst also ensuring that we're managing risk. We also look at data as an asset. It's another key priority for our strategy. Obviously, AI consumes and is dependent on vast quantities of data, and the better access that we have to good quality data, the better that we can use AI as a technology to deliver value. And then people and engagement. There is no AI without the people around the organization, and so we very much look at our upskilling and talent and how we want to manage our people and organizational design to align with our strategy and align with the emerging and continued evolution of the technology. So all those things together coalesce into a cohesive single strategy for AI across the group, but we allow for the sort of nuances across the different markets where necessary, and across the different businesses where necessary. So what that means today, so we've been using AI across our different businesses for some time. We have around 600 AI use cases in production today. We were ranked by Evident AI last year in their benchmark at number 7, I think, in the top 10, which we're very, very proud of. And we're increasingly now looking at the adoption of generative AI across various domains. And so, but as Muzo said, we need to ensure we're doing that in a very considered way. So we're doing things the right way. We feel we're taking considered and measured steps towards adoption, again aligning to the strategy and ensuring that we have a benefit and a purpose defined there. But to give you a flavour, and probably get into some more detail later, of where we're seeing benefit, it's around general productivity, essentially enabling people have become so accustomed to use of the likes of ChatGPT and others in their personal lives. Want to make sure that we can enable those types of tools in the right way to help our employees manage their day-to-day tasks. But we also look at more focused, more narrow use cases, so the likes of a GitHub Copilot, which we now have in use across thousands of our developers across the bank, and we're seeing great value from that, as well as other more business-specific use cases across our credit teams, as well as our customer service centers. So we'll continue to explore and we'll continue to adopt, but it's all grounded in that safe and responsible approach.
Thank you. Charlotte, would you like to introduce yourself?
Yes. Hi, everyone. I'm Charlotte Wood. I head up AI and innovation at Schroeders. I've got slides, but I promise I don't have loads. I just thought it might give a bit of structure to what I'm going to talk through. So I'm responsible, my team is responsible for bringing generative AI into Schroeders, putting it into people's hands, and enabling the company to get value out of this technology. And the way we think about our AI strategy is kind of in three different areas, which actually Doug and Muzo have both touched on. I think the key thing on this slide is, firstly, we're really looking at the use of AI to scale our business. That kind of applies in all the different parts of this pyramid. And it's all about using technology to either take tasks away so that people can focus on higher value activities, or actually being able to do processes that we couldn't do before because the manual effort was prohibitive. So for example, we're an information processing business, ultimately using information to help make investment decisions. So the more we can do that, and the more effectively, the quicker we can do that, we think that brings us an advantage, and that kind of underpins everything that we're trying to do. The other thing to understand about this slide and the different areas we're focusing on is you need a different approach for each of the different layers of this pyramid. I think, as Muzo said, this bottom layer, where we're taking AI tools and putting them into the hands of all of our employees to help them use it in whatever way is most effective for them. So somebody in marketing might use it to help them research and create content and do that faster. Somebody in our investment teams might be using it to look at documents and pull out information. We need to help them understand what these tools are good for, how to use them safely, and actually drive that adoption, because otherwise they just sit there because they are so kind of multi-purpose. We need to kind of help people understand how to use them. So we have 3 different tools that we kind of offer across the company. We have Copilot from Microsoft, ChatGPT, and we've given those to kind of targeted personas. And then the one that's available across our group to everybody is our internal AI assistant, Genie, which we launched almost 2.5 years ago now. And that is kind of the most broadly used. It runs on OpenAI models, so it's a very similar experience to ChatGPT, but ensuring that all of our data is protected and that we can also tailor it to our own workflows, connect it up to our own data sources. So we're lucky enough, we've got around sort of 60% of the company now on a weekly basis using these tools. And we're seeing a huge amount of benefit. Some people are saving half a day a week, more than that. Other people, we still need to bring on that journey, so that's evolving. This middle layer is then where we're looking at our common kind of business workflows and integrating AI into those. And I think this is where we're talking about more of a targeted approach, looking at what are the kind of expensive things that we do as a company? What are the processes that actually we're doing at scale? And we can use AI to really kind of drive efficiencies in them, or in fact, do something that previously we didn't really have the time to do. So good examples of this are translation. Obviously, we're a global business where we're producing content, often in our kind of London hub. we want to get those insights to clients as quickly as we can. And now using AI to do that translation instead of kind of the agencies we were paying before, not only saves us a lot of money because we don't need to kind of pay for those services, we can just have our local marketing teams check the output, but it also means that I think it's 30% reduction on the turnaround time for content, which when we're commenting on kind of global events, market movements, that's actually really meaningful to get those out to our kind of global offices. So that's a good example of that. ESG analysis is another one that I'll touch on. And then the top of this pyramid, I think it's really important for us to think about, not just the efficiencies, not just productivity gains, but actually what could this mean for our industry looking into the future, looking kind of 2, 3, 5 years out, and what could the impact be of AI on the products and the services that we offer our clients and how we offer them to our clients, because we genuinely believe that this is going to impact all industries. That doesn't leave investment management untouched, and we are exploring kind of where could AI play more of a role in the products that we offer in our client service experience. And that is obviously kind of a longer term play and quite exploratory. Some of our experiments may end up not going anywhere, but we do think it's really important to be looking at that. So that's a summary of where we're focusing. I'm going to very quickly, because we were asked to talk about tangible use cases, so I thought I would show you a couple that we've had live in the business for over a year now. One of them is the ESG example that I mentioned. So this is a tool that, similar kind of to Muzo's example, enables an analyst to very quickly gather information about the sustainability credentials of a company. And when we look at a company's sustainability ESG credentials, we're asking about 200 different questions, including, do they have a net zero target, or what's the gender diversity of their board. It's a lot of different questions, and that information comes from sustainability reports, annual reports, website research, and using AI to actually collate the first draft of that information takes the process from something that could be up to 8 hours for an analyst to do down to about 15 minutes. And then we can actually, for the analyst, they can spend that time then starting to compare companies with one another, starting to do the actual value add research over the top of that. So that's been quite a helpful use case for us to have. And then the second one is in our private equity business. The first phase of this went live in summer last year. So looking at using AI to help create investment memos, because again, a private equity professional spends a lot of time actually just drawing information from the data room, from looking at the company on the internet, from different sources into a structured memo that can then go to an investment committee. But if they're spending their time pulling that information together, they have less opportunity to do the actual kind of analysis over the top. Like, what is it that makes this a really good investment? More of that thoughtfulness. So using AI to create that first draft of the memo for them, and they can also ask questions about the company much faster, helps them evaluate that deal more effectively and faster. And then obviously they do a fair amount of checking and overview and actually making the investment case if they believe in it. The second phase of this that went live a couple of months ago is then a second agent that helps the investment professional check over the memo. So it has access to our historical deal information, and it can look at the memo and the historical deals, and for similar companies say, okay, well, for a deal in the past that you made, you considered these risks. Do you need to consider these for this memo? And then if they haven't been accounted for in that first draft, it can highlight that, and then the investment professional can regenerate to incorporate that feedback. So we start getting a situation where the AI agents are actually kind of working together and challenging each other to get a better outcome at the end. So there are a couple of examples of how we're using it, but happy to go into any more detail.
Doug, let me start with you on strategic alignment. We were discussing before this panel with the CEO of your operation in Chile, and my question is, how do you run this AI complex AI implementations in organizations with multiple business units, multiple geographies? Do you do it centrally? Do you delegate to the markets? Do you delegate for these different businesses? Can you comment on that, please?
Absolutely. So it's a hybrid approach. So we recognize that there is a need for some amount of central expertise, for central capabilities, as I touched on, particularly as we're increasingly reliant on, to a greater or lesser extent, on third parties for the foundation models that they're providing, ultimately how we're consuming and orchestrating our use cases sits around these third parties to a great extent. So we need that central capability to bring everything in the right way, to ensure that we have consistency in how we're approaching standards around orchestration, adhering to a globally consistent lifecycle process such that we have the right enforcements of toll gates and controls and the management of risk. But at the same time, very much have to have the business units and respective markets engaged. They know the business well, they know the business better than anybody at the center is going to. And so we have to be empowering business leaders and having the right organizational design in place across our different business units and within our markets to ensure that we're identifying those great opportunities for deploying AI. And so the way that we sort of instantiate that at HSBC is through a centralized or sort of hub and spoke approach to a governance structure. We have a group AI review committee, which is the senior most governing body for all things AI at the bank. And among other responsibilities, we are looking at how we control and manage the adoption of generative AI particularly. But when we have federated out to our global businesses and global functions, AI review councils, and we've appointed very senior members, very senior managers to each of those councils that represent our key businesses and our key functions. And so that's important both for the point I just made around helping to identify the real opportunities, whilst also partnering with the center to make sure we're leveraging central capability where it makes sense. It's also really critical to driving accountability, to ensuring that we have the ownership of use cases, to ensure that we are assessing appropriately the risks as well as the commercial benefits. And so we are maturing in that approach. There's of course a greater drive for further delegation of an autonomy, which makes sense, and I expect that across the industry we will continue to see more ubiquitous adoption of AI and generative AI capabilities, where our old structures may not make sense anymore, and so we'll have to continue to refine and evolve both our governance structure and our risk management capabilities. So there's a couple examples there of how we are looking at it.
Thank you, Doug. Muzo, you started mentioning about investments. We have a lot of investment professionals here that would love to learn about how to really use AI to create an investment edge here. No? Can you comment on best practices?
Yeah, absolutely. So again, I'm part of a systematic team that's been around for a very long time, and we've had a lot of success with using automated trading strategies, whether they're kind of simple 40 years ago or much more sophisticated now. You've got to understand, like at its core, what is investing about. It's really about two things, or maybe three things. But there's two things, like all investing, whether it's fundamental or systematic, it starts with gathering information. And that might involve two computers talking to each other and exchanging some numbers, or it might involve two humans talking to each other, because humans, how do we exchange information, especially qualitative, subtle information? Via language. So whether you're running a systematic process, a fundamental process, I would be looking for ways to leverage AI and technology to do, especially what it's very good at is like the first draft. It's taking, we have algorithms that read 6,500 broker reports every day. And actually, I'll invite a little bit of audience participation here. I know pretty much everyone in the audience is going to put their hand up now. So put your hand up if you speak 2 languages. Keep it up if you speak 3 languages. 4. 47. So the really nice thing about some of these large language models is, again, what are they doing at their core? They're turning words or characters, tokens, whatever you want to call them, into numbers. So the really nice thing about this is now you have the ability to get something you couldn't have before. Like, if you're a portfolio manager sitting in London or Santiago, wherever, you probably don't speak Korean and Japanese and things like that. So I think the first thing that I think gives our process an edge is suddenly you're local everywhere. You've got this ability to access information. Again, if anybody who goes to their Bloomberg terminal wants to get Spanish or English language news on a Korean mid-cap company, you're not getting that. Whereas now you've got the ability to say, effectively gather every word, everything that has been published about every company in the world, and then distill that down and use it how you'd like to. Now, obviously, if you've got more of a fundamental approach, then it's going that first step and saying what's going on with thousands of companies around the world, what's significant, what should I pay attention to. But then obviously I'm biased. The next piece of investing after gathering that information is, okay, how do I put it together? Is this more important than this? How significant is the valuation versus who's owning and selling and trading the stock, and what are the long-term fundamentals looking like, and the short-term fundamentals? Oh, Trump has announced tariffs. What does this mean? It's an exporter. So again, I think broadening out. Everybody's talking about generative AI because it's very seductive for non-technologists. You type words, you speak your language, and it gives you something back in its language. But there are so many, an AI textbook would have a couple of chapters on text, and then all of these other types of algorithms that can do lots of different things. So it's also about thinking more broadly and utilizing AI, machine learning, data science principles to do this great job of identifying what is important, what's not important, what matters. People will have these heuristics, these rules of thumb, like in this sector you want to pay attention to this on the balance sheet, in this sector you want to pay attention to this in the earnings statement. You can prove that. So again, we've partnered with some Stanford professors who are part of our AI lab in Palo Alto. One of them has helped us to build a piece of infrastructure that enables you to run a 5-year backtest in 1.8 seconds. Now, why the hell do you want to run a 5-year backtest in 1.8 seconds? Because you can run 1 million backtests. And again, it comes back to this point, answering these big questions. How should I put all of the information in the world together? Well, actually, machine learning and AI is very good for answering that question. It can test 1 million scenarios and say, in thousands of these scenarios, the best option was to put a little bit of weight on valuation, a little bit of weight on quality, a little bit of weight on what the brokers are saying today, and a little bit of weight on what hedge funds are saying. And then finally, because I'm going on a bit here, the key learning point as well is you've got to combine world-class domain expertise with world-class technical expertise. Actually, I'm not a machine learning expert. There are pieces of infrastructure that we have that I'm absolutely not allowed to touch. I could go away and build an AI model for picking stocks, but I don't have a PhD in computer science. I'd probably overfit it. I'd make some big mistakes. But if you took those guys with PhDs in computer science and told them to build a trading system, they'd probably forget about transaction costs or overfit. So this is the final thing that I would say. If you want an edge, you've actually got to have an edge up and down. You've got to have the best technologists who really understand in depth how these things work and how not to make mistakes. And you've got to have the world-class people who understand their domain, whether it's the law, whether it's customer services, whether it's banking regulations, and they've got to work really well together.
Fantastic, thank you. But building on that, Charlotte, what do you think are the new skills and capabilities that companies need to develop on their talent pool in order to be successful on these AI implementations?
Yeah, I think a huge part of it is to cultivate a culture of change and learning. It's not necessarily the most comfortable thing for everyone in the organization to feel like they need to learn to use a new tool. But I truly believe that there's not a single person in Schroeders who wouldn't benefit from using AI in their day-to-day tasks. So I think, as I kind of showed, like that bottom layer of driving adoption is actually just change management. It's just how do you embed a new way of working, a new kind of understanding of a technology that is available in the same way that emails came into our businesses, Excel came into our businesses. It follows the same pattern of there are some people who will pick it up and they'll see the opportunity and they will teach themselves. And you've got to reward those people. You've got to highlight them. You've got to show that they are actually getting a benefit in their role, not using AI for the sake of it, but performing better in their role and being recognized for it, to try and get the rest of the organization to follow on. Because I think that, everyone says this about their kind of people organizations, but it is so important to have that kind of ongoing innovation and that ongoing kind of change culture, because otherwise you can have the best tools in the world, but if people are not willing to change the way that they work in order to capitalize on that, you won't see much benefit from it. We have not needed to hire like a hugely different skill set in order to progress our AI program. And the people who work in my team from a technology perspective are software engineers. They are very talented software engineers, but they were not previously AI engineers. They have come in to build the tools because working with these, and I'm talking specifically about generative AI. In the other areas of AI, you 100% need your computer scientists and your PhDs. But for the large language models, the way you work with them as a developer is in exactly the same way as you work with other tools, because we're not training our own models. We are using models off the shelf from OpenAI, from Amazon, and we don't need to know what is happening on that side of the fence. They're doing all of that really complicated work. We're just using the kind of the technology out of the back of it. So we are able to use our software engineers to create very sophisticated AI solutions alongside our data science teams who we bring in when we need to. But actually, we haven't needed a wildly different, extremely expensive, different set of capabilities than the ones we already had in the building.
Thank you. How difficult is to work with these partners? Is very different from other ones, or do you think that is straightforward?
So mostly we're working with our existing kind of cloud providers. So Microsoft is a strategic partner of ours. Amazon is a strategic partner of ours. So it's really come under that same banner. We were quite early in forming a strategic partnership with OpenAI as well. So it's been, again, just over 2.5 years that we first signed up with them. And I think the difference in working with them is just how in demand they are. It's quite challenging, I guess, to work with a company that is scaling at the speed that they are scaling, because I guess we're used to being able to kind of ask for, a call with a security department to go through security questions, but because everyone is trying to work with these companies, everyone is asking for that call because they all want to onboard them. So I do remember when we were first signing up with them, it was they were just obviously extremely in demand. Yeah. So that's the only thing. But no, I mean they've been great partners. They innovate at a speed that we haven't really seen before, and they also lower their prices of their models on an ongoing basis, which is also quite unusual for a vendor.
Thank you. Doug, you mentioned a lot about risk, and we are in a very risk-averse setting, So, how do you manage risk, like, I don't know, model bias, data privacy, any framework emerging? What can you share with us?
So my on this topic, my opening gambit is always that there is no AI risk. which might sound a little confused to this, what's going to follow, but what I really mean is that there is no risk type that is purely just AI. We have, as a financial institution, a large taxonomy of existing risks, but we recognize that AI is quite likely to amplify those risks in certain scenarios. And so what's important is that we have a robust, established, mature risk management framework in place that we can use and that applies to AI, and that we augment it as needed. So things like bias, explainability, transparency, these are all typical manifestations of largely model risk. And so the model risk function subject to the likes of SR 11.7 or PRA SS 123, existing model risk management regulations, they've been around for some time. To a great extent, we build on those, we leverage those to ensure that we are identifying and assessing risks related to AI appropriately. But where we need to, we look at augmentation, and we look at what additional sort of idiosyncratic controls are necessary for a given use case. I would say that with generative AI and with it becoming more user-centric, if that's a way to describe it, essentially we have a lot more people with hands-on keys that are interacting with these models that were previously perhaps the reserve of quant teams and more specialists. It's increasingly important that we have the right operational control in place. And part of that can be training, part of it is around having guardrails in place, part of it's like recs and checks that we've been doing for some time in our operations. And so with each use case, we first and foremost apply our risk management framework. So model risk, data risk, tech, cyber, resilience, legal risk, reputational risk, regulatory risk. We look at all of those dimensions that are instantiated through our risk management framework, and we also look at the more idiosyncratic approach. And so I would say that, my key message is that there is no unique and discrete AI risk. It's certainly an amplifier of existing risk, and is likely to continue to amplify certain risks as the technology evolves, and as Charlotte says, it moves with such pace with the third parties. I think that's probably one other area that gets a certain amount of attention is potential increased dependency on third parties. Talk about concentration risks and herding and various other risk concepts such as those, and we're aware of that. But I think, again, what's really important is we look at our risk management framework as it relates to third-party risk. We see where that might need to change, and we see what our suppliers using AI responsibly. Are they adhering to the same standards, ethical and safety and sort of security-wise that we do when we look at developing AI in terms of how that's being produced and procured. And so it's all around augmentation. I don't think it's around anything net new, but it is continuing to assess and mature in line with the technology and how that compares with the Schroeders and BlackRock. But
yeah, very similar. I think there are lots of different kind of angles of risk to consider, and we similarly have a responsible AI committee, senior sort of level, who cover off those different angles and think about how does this use case kind of score against these. What I would add, I think, is that when you have your responsible AI principles, it's really important to be clear with your kind of colleagues and employees what you do and don't want them to do with this technology, because the tools are becoming so powerful that as an individual in the organization who has access to some of these, there's a lot that you can do. And firstly, you incur a lot of risk if you haven't told people how to use these tools safely and made it kind of very clear that they are accountable. You have to have an individual who is on the hook for this, and you can't sort of abdicate responsibility to the tools that you're using. But it also really slows innovation when people don't know what they're allowed to do. So having that clarity actually helps you move faster, because people are confident that they understand what they can and cannot do with this technology. And I think being able to kind of publish that and have that ongoing review and clarity with your organization does help you kind of innovate faster when you've communicated it.
Great insights. Question to the three of you. What are the 1 or 2 use cases that you would recommend all these people not to overlook in the near short term or medium term?
This will probably only apply to some people, but a lot of the success we've had is in, well, initially retraining large language models. So if you do have enough data, what you can do is take an open source large language model, maybe not GPT, but there are lots of other models out there, and then you can say, well, actually, I've got a certain type of document that is really important to me, and I can link it to an outcome. So again, one of the examples I gave in terms of reading broker research, the nice thing we have is we've got a database of 25 million broker research reports going back to the 90s, and we've got all of the stock price returns. So you basically take this large language model that kind of, let's say it's like a teenager in terms of understanding of language, then you give it a financial education. You say, here are 25 million broker reports, here's what actually happened with the stock. It reads a broker report, says the stock is going to go up, you reveal, oh no, the stock went down, it learns. So there may be people, and again, DeepSeek for us was actually a bit of a reminder that these things are getting a little bit cheaper. So we're potentially now, we're experimenting with training our own large language models from scratch and say, don't go out there and read the internet, just read our database of millions of financial documents. Again, as I said, it will probably only apply to some people, but a lot of the success that we're having is in more targeted AI tools. Yes, there are certain things that you can only do with GPT, but if you have databases of millions of documents, in the same way that some people will have web traffic data, and you'll know where people are clicking on your website and things like that, and then you can predict where they're going to click next. So yes, there are certain things that you can only do with GPT, but kind of keep your mind open. If you've got enough data and you've got the people with the expertise to do this, fine-tuning large language models, fine-tuning the AI tools to get less good at writing Shakespeare essays, but better and more accurate at your specific use cases, that's definitely something to consider.
Thank you.
Yeah, it makes total sense, and the commercial dimension of that is really key. And so these potentially smaller models also, or more targeted models, you're going to have greater performance, less latency, most likely. They're going to be cheaper to run, and they're going to be more specific to the actual objective, which is again a risk dimension also. So would 100% agree with that. I think there are going to be, for most institutions, some no regrets moves. And so we touched on it earlier in terms of general productivity, which potentially a little on the other side of having a more targeted approach. Everybody's, expect that the audience has ChatGPT on their phones and various other types of tools that we're all interacting with every day. One of the risks that we are, maybe one of the more idiosyncratic risks of AI is so-called shadow AI. And so what we need to avoid across all institutions is that individual employees are taking it upon themselves to use their personal devices, their personal applications with potentially company data because it's helpful, because they're trying to do the right thing, because they're trying to make their work quicker, perhaps look at accuracy, perhaps learn new things. And so I think there are some no regrets moves around general colleague productivity in enabling employees to use these tools safely, responsibly, and that largely means bringing them into the organization's firewalls, ensuring that we have the right controls and protocols in place to prevent or mitigate the risks of data loss or misuse, ensure we've got the right guardrails in place around content moderation such that these tools are only being used for appropriate and suitable things. Excuse me. So I think that's one example where there are, it would, if you can do it, if we can do it in the right way, it makes sense to be able to enable employees to utilize these tools. I think the other really high impact use cases are going to depend on the institution. And so per some of the earlier points, it's around identifying where we have a real opportunity for more transformative change across our processes, We see a lot of grassroots use cases, a lot of individual ideation around a GPT can help me have a knowledge management solution where essentially I'm consuming information faster, I'm pulling information together, and that's really valuable. But often it's on a more micro basis. I think we're yet to see across the industry and perhaps across industries really transformative adoption of generative-based solutions and verging into the more agentic side of solutions where we see actually front to back the process is completely changed, and that's where we're going to see greater benefit. So I'd say if you can identify processes across the organization where there's great scope for that more transformative change, and that's largely around the availability of data, the number of touch points, the number of decision points that happen in that process, focus there and make those very tailored to that specific objective in mind. So I think two sort of contrasting perspectives there on where you can see value.
Yeah, I guess I would agree, like, don't underestimate the impact you can have with those individual productivity tools, and trusting your employees to find where it's going to deliver value for them. I think in terms of choosing use cases that are kind of more in that kind of process, sort of embedding AI into your workflows, it is quite organization dependent. I think translation was a very simple one for us, and it has given us good ROI. I think where you have processes that you have potentially handed off, like translation, it does make it easier to achieve that ROI because it's very clear where the kind of entry point into your organization is, and you can kind of lift it out. It doesn't require the level of organizational kind of process redesign that some of these do if you really want to address an end-to-end workflow. So that can be quite a simple one. But for investment teams, I mean, I would just look at where do you have information that is currently trapped in unstructured data. So reports, earnings transcripts, even transcripts of your own team's meetings. That becomes an incredibly valuable source of data, where previously we had investors who had to join a call with our economics team and hear all about, you know, what was their perspective on what's happening. Now we can just take that information and pull out the really relevant insights for people and share it with them, and it goes into our research system and people can access it. Previously they'd have had to go and read all of this to pull out insights, and now they don't. It makes information sharing across your teams and within your organization also much more effective. So I would think about where do you have information that is in words right now that you can go and pull out and use for your investments.
We are running out of time, so last question for each of you. Any last piece of advice for people that are studying or, you know, in the mid section of this journey?
So it's interesting picking up on what Doug was talking about with agents. Another thing that we found very useful, you may go to GPT and try and ask it a big complicated question and give it a multi-level task and things like that. Again, what we found successful is break these things down. So we have, again, one signal that reads research, looks for macro trade ideas, and then proposes what you should buy or sell. But then on top of that, what we do is we have another large language model that then evaluates that, says, is it a good idea to buy or sell that? You know, one of them was saying, oh, inflation's going up, you should go short food producers. And then the next agent comes along and says, but maybe the food producers will be able to pass on that inflation. So I think as well, this is something I keep coming back to. These tools can be very seductive because you could type in this massive prompt and ask it to do this very complicated thing. Don't do it like that. Break the tasks down. The more you narrow these things down, the more you narrow down the task, and to have do an LLM, do this little thing, pass the information onto this to do this little thing, to do this, evaluate it, that can actually be extremely, extremely powerful.
Yeah, absolutely. Maybe sounds a little counterintuitive to innovation and this emerging technology, but I would say make sure you're building good brakes, and I guess more broadly what I mean is have your framework and foundations in place. I think frequently we see a really distributed approach that often struggles to scale. We struggle with duplication, inconsistency, and those things often struggle to convert into actual real-world values. So getting a really robust framework in place, whether that's around risk, commercial management, optimization, the way that we build our organizational design to ensure we've got the right skills in place, the right level of expertise, and that we're bringing in an appropriate curated list of vendors to support that is really critical. And that's ultimately going to help with the pace as you mature as an organization.
Yeah, I think I would say if you're at the start of the journey, just start. Like, I wouldn't agonize for too long over kind of how are you prioritizing all of your use cases and making sure it's the most valuable one and you know exactly what you're going to get out of it at the end. I think the most important thing when this technology is moving so fast and evolving so fast is to start building that organizational muscle of change and getting your governance structures in place so you know how to control it, getting your people kind of starting to be upskilled on these tools and understanding what it's good for, what it's not good for, and the amount that you learn from delivering 1 or 2 use cases can then help you go on to do that at broader scale across the organization. So I think actually just getting all of that kind of, the momentum underway now will benefit you massively in a year when this technology is even more powerful and you can start deploying it for even more things because you don't want to be at a standing start at that point.
Well, thank you very much. I would like to thank all the panelists for investing time to share their perspectives and their experiences on such a fast-moving topic, no? So thank you, and thank you for the audience as well.